Hello and welcome to this session in which we will discuss auditing the cost accounting record during the inventory cycle. So one of the aspect of the inventory cycle, one of the step is when we transfer assets and cost internally from one account to another. For example, from raw inventory to work in process, from work in process to finished goods. And that's one of the processes that we undertake when we're auditing the inventory cycle, one of the 5. Now, what is our primary concern here? When we are transferring these assets from raw material to work in process, from work in process to finished goods, from finished goods to cost of goods sold, we want to make sure we are tracking the quantity properly. We are valuing the transaction properly. So we want to make sure that the transfer did occur. We accounted for all the transfer and it's being accounted for properly. Once again, this is one of 5 key activities in the inventory cycle. The other activities are acquiring and recording the raw material, labor, and overhead, and we cover this in the acquisition and payment cycle. Ship goods and record revenue and cost after the assets are in finished goods. We sell them. That's part of the selling cycle, so that's covered also in a different cycle. And notice here, this is another review to tell you that the inventory cycle is also interconnected to the purchasing, the acquisition cycle, and it's also connected to the sales cycle. And the other 2 topics that we need to talk about when it comes to the inventory cycle, which we'll talk about separately, the observation of the inventory and how to price and compile inventory. In this session, we'll focus specifically on how do we transfer the cost or the asset from one asset to another within the inventory cycle. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
So let's take a look at the big picture and physically at the picture of how the asset is transferred. First, we have beginning inventory, raw material. Then we purchase raw material. Then we issue raw material to work in process. So what happened is assets are transferred. We transfer assets from raw material to work in process. Then we have obviously ending inventory for the next period, ending raw material. Same thing with labor. We hire labor and we assign them to work in process. We assign them to the manufacturing plant. We incur overhead. We apply overhead. Remember, we apply overhead and we transfer those. We transfer the cost to work in process. Now, once we are done with work in process, once the items are completed, we transfer them to finished goods. And once the finished goods are sold, it's transferred to cost of goods sold. So when we are doing this transfer from one area, from raw material, from direct labor, from manufacturing overhead to work in process, we need to keep track. We need a cost accounting system that keep a close eye on where the money is going, where the asset is going. And notice there's a close relationship between this cost, the inventory cycle, and the purchasing and sales, because initially here we make the purchases and here we make the sale. And the inventory cycle is kind of in between. But specifically within the inventory cycle, we're looking at work in process. And I hope this term, work in process or work in progress, sounds familiar to you because you need to be familiar with this concept from managerial and cost accounting. And most likely you took those courses in college before you are taking your audit course. Now, what we need to understand is what are cost accounting control? Well, what do we need to control? Well, Again, what's cost accounting? Cost accounting or cost accounting system tracks the related cost from the moment raw material are requested to the completion of the manufacturing stage to the transfer to the storage. So the cost accounting system, that system that keeps track of everything from raw material to finished goods to cost of sales. It's a comprehensive system, and there are two main categories for these controls when it comes to cost accounting system. One, we want to make sure we are physically keeping track of the asset, physical control over raw material, work in process, and finished goods. So we're looking at the quantity, the physical track of it, and we want to make sure the dollar amount, the proper dollar amount, is being assigned to these assets as they are transferred. So these categories ensure both the physical existence, the occurrence, and it will make sure the information is accurate, valuation. So we are concerned with accuracy, and occurrence, but also completeness. We want to make sure everything is accounted for. The first control is, just like in any cycle, is segregation of duties within the system. So the purpose updating the perpetual inventory master file, which is the detailed record of inventory, should not have access to the actual inventory. Also, people managing, and we should know this, that people with access to the record should not have access to the asset. And what we have to know, people that are managing the cost accounting system should not be able to physically handle the asset. Now we have to understand the cost accounting system. Think of it, it doesn't have to be, but think of it as a separate accounting system within the company. And sometimes it could be a separate software system. They're keeping track of their production system separately from their accounting information system. Whether it is integrated or kept separately, the person in charge of the system should not have access to the asset, should not also have access, should be able to change the other system as well, the accounting information system. So this is what we mean by segregation of duties. We need to keep things separate. Now, why? Thinks of checks and balances. So let's assume this is the person in charge of the books, in charge of the system, and this person in charge of the asset. So this person can only count, but they don't have access to it. And this individual, they can actually, the production people, they have access to the asset. So think of it this way. Because if one person controls both the records and the asset, it opens the door to potential errors and fraud, because you can change the record and steal the asset or misuse the asset. So the accounting information system needs to be compared to the general ledger. Therefore, those two will need to be separated, the cost accounting system and the general ledger system. So if the person in charge of the cost accounting also have access to the general ledger, there could be problems because those two systems would need to be reconciled. Now, when we're throwing this word cost accounting system, I don't want you to think it could be as simple as a spreadsheet that tracks cost, production cost. At larger companies, we could have a software like an SAP or Oracle or QuickBooks. It could be integrated. It could be a separate system. Or in some companies, think of it as a manual. They're keeping things on a piece of paper. So the principle remain the same. You have to have that segregation of duties. The person managing the cost record should not have access to the asset. As far as auditors, we are concerned with four aspects of cost accounting. First, the physical control of inventory, documents and record for transferring inventory, the perpetual inventory master file, and the unit cost record. First is we want to make sure the assets are physically protected. Physical protection is important, otherwise the assets could be lost. So physical control over inventory means physically segregating and restricting asset to the storage area for raw material, work in process, and finished goods. This controls the movement of inventory. So how do we do this? Think of locks, security cameras, custodian, someone in charge, a guard, basically a guard in charge of the asset. So physical segregation could be simple or it could be sophisticated depending on the business. Physical segregation could be as simple as putting locks on the door, or in terms of multinational companies or large companies, could be you have to scan you have to use sophisticated scanning item before you access the area. There are cameras all over the place, sensors, so on and so forth. I can tell you, for example, one time I visited the Ford Motor Company in Dearborn, Michigan. Basically, it's a small city where they produce the F-150 pickup truck. And there are sub-houses for raw material, because before they manufacture the pickup truck, they have all these raw material, whether they are the tires, the batteries, the stereo system, so on and so forth. And what's going to happen is not everyone can access everything. There's our sophisticated control of who can access which area. So imagine walking into a warehouse where anyone can grab anything they want to. What would happen? Well, you would have chaos. You would have inaccurate accounting system. Inventory would disappear. So auditors want to see a well-organized and a secure environment. Now, how do you do this? How do you audit this? You go there and you just observe by. Let's take a look at this true-false question from Farhat Lectures. Total direct labor are typically used as a basis for allocating overhead. Typically, yes. If the company uses direct labor and they believe the more they pay in direct labor, the better is a reflection of costing the item. In other words, the more direct labor a product uses, the more overhead we should allocate, then yes, it could be used, which is true. Now, sometimes rather than direct labor dollar, we use hours, or rather than labor we could use machine hours. Now, companies could use multiple multiple drivers, and we have something called activity-based costing, where they are using multiple cost drivers for the overhead. But typically, labor and machine hours or labor dollar amount are the traditional ones. What should you do? Now you want to go to Farhat Lectures, look at additional resources, MCQs, lectures, true, false, whatever resources you can find to improve your knowledge within this inventory cycle, whether you are an accounting student or a CPA exam candidate. Invest in yourself. That's the best investment you can make.